What if I told you that a new proposal in the Senate could dramatically reduce the amount of taxes you owe just because you've reached the age of 65? That's not an exaggeration. That's exactly what lawmakers are discussing right now. The proposal aims to add a $6,000 bonus to the standard deduction specifically for seniors. If you're a Social Security recipient, this news could mean keeping more of your money instead of handing it back to the government during tax season. And in this economic climate where every dollar counts, that's a big deal. Inflation has driven up prices on everything from food to housing to healthcare, and many seniors are already living on fixed incomes. This deduction proposal could be the lifeline so many have been waiting for. In this video, I'm going to walk you through exactly what this deduction means, how it compares to previous proposals, and what impact it could have on you or your loved ones. Whether you're retired, planning to retire, or helping a parent who's managing their Social Security benefits, understanding this legislation is essential. The information could affect your 2025 tax return and your monthly financial outlook. Before we dive deeper, I kindly ask you to hit the like button and subscribe to Social Security Post. We break down the complex world of Social Security, Medicare, and retirement planning in plain language, so you don't miss out on the updates that matter most. Stay with me. This could be one of the most important changes you hear about this year. Let's rewind a little and look at how we got here. Not long ago, the House of Representatives passed a proposal to boost the standard deduction for seniors by $4,000. That alone was seen as a substantial move, one that recognized the unique financial challenges faced by older Americans. But the Senate isn't stopping there. Their version of the bill raises the proposed deduction to $6,000. That's an additional $2,000 that could be removed from your taxable income just for being 65 or older. For millions of seniors, this isn't just a number, it's real savings on their tax returns. The political back and forth between the House and Senate isn't uncommon, but this time it's unfolding in a way that could work in favor of everyday Americans. If the Senate's version gains momentum and becomes part of the final law, it would offer broader and deeper relief. Lawmakers understand the growing pressure on retirees, especially with the rising costs of prescription drugs, housing, and even utilities. The fact that both chambers agree on increasing the deduction, though at different levels, shows there's a bipartisan interest in easing that burden. Now it's a matter of which number becomes the law of the land, $4,000 or $6,000. Either way, seniors are in a better position than they were last year, and that's a step in the right direction. There's some confusion floating around online, so let's clear the air right now. This $6,000 is not a bonus added to your Social Security checks. You will not be seeing $6,000 extra dollars hitting your bank account. This proposal is about increasing your standard deduction, the amount of income the government lets you subtract from your taxable earnings. And while it may not sound as flashy as a raise, the impact can be just as powerful. When your income is lowered on paper, you owe less in taxes. For many seniors, this can result in owing zero taxes at all, especially when combined with other credits or retirement deductions. Now, here's where it gets meaningful. Every year, millions of seniors file taxes, even if they're only living off Social Security and a small pension or savings withdrawal. For many of them, being able to deduct $6,000 more from their income could be the difference between paying a tax bill and getting a refund, or at the very least, breaking even. Think of it as an invisible financial shield. The money stays in your hands legally without changing your Social Security benefit or requiring complex paperwork. This is why it's so important not to confuse the deduction with a benefits raise. The benefit is hidden in the numbers, but its effect is just as valuable. But let's break down the numbers to understand why this matters. As it stands in 2024, the standard deduction for a single individual is approximately $15,000. For a married couple filing jointly, it's around $30,000. That means the first $15,000 or $30,000 of your income is not taxed. Now, imagine being able to add an extra $6,000 to that. If you're a senior filing individually, you now have a deduction of $21,000. For married seniors, you could deduct a whopping $42,000 from your income. That's a substantial difference that could wipe out tax liability entirely. Here's a simple example. Say you're a senior couple with a total income of $40,000. Under the current deduction rules, you would subtract $30,000, leaving $10,000 as taxable income. But with the new proposal, your deduction would go up to $42,000, which means your taxable income is now zero. That's a legal way to avoid paying federal income tax, and you don't need to jump through hoops to qualify. This is the kind of smart structural change that could ease financial strain for millions, especially those who earn just enough to trigger tax payments, but not enough to comfortably absorb them. You've likely heard politicians call for the elimination of taxes on Social Security. It's a headline-grabbing idea that gets people excited, and understandably so, but here's the catch. Only about 30 million seniors would benefit from ending taxes on Social Security. That's less than half of the 65 and older population. In contrast, increasing the standard deduction applies to all seniors over age 65, regardless of whether they're currently receiving Social Security or not. That means over 70 million Americans could benefit from this $6,000 deduction. It's not just a more inclusive approach, it's a more efficient one. So the deduction system is simple, accessible, and doesn't require a full overhaul of the tax code. It also sidesteps some of the complexities and political resistance that have blocked Social Security tax reform in the past. Whether your income comes from wages, a pension, or your retirement account, this deduction helps you shield more of it. While eliminating taxes on Social Security is still a worthy goal, this proposal could be implemented faster and would affect more people. It's not a substitute, it's a broader, more immediate step toward tax fairness for seniors. In 2023 alone, seniors paid a staggering $55 billion in taxes on their Social Security income. That's not a typo. According to the annual report from the Social Security Board of Trustees, that's the actual amount collected from retirees' money that many believe should have never been taxed in the first place. After all, these are benefits that people worked for, paid into for decades, and then had to give up a portion of again once they finally began receiving them. For many seniors, it feels like a double tax, and a painful one at that. This is where the deduction proposal offers real hope. It doesn't eliminate the taxation of Social Security entirely, but it offers a practical way to reduce it or avoid it altogether. Seniors who are just above the tax threshold may suddenly find themselves below it thanks to the additional $6,000 deduction. That means more breathing room, more money left in their bank accounts, and less anxiety during tax season. When you look at the big picture, $55 billion in taxes from people on fixed incomes, it becomes clear that change is overdue. This deduction may not undo the past, but it can rewrite the future. What happens now? Well, both the House and Senate have made their proposals. The House wants to offer a $4,000 deduction for seniors, while the Senate is pushing for $6,000. Before anything becomes law, they'll need to reconcile these differences, likely through a final vote or compromise. That's where your voice matters. If you believe this deduction should happen, and at the highest level possible, this is the time to reach out to your local representatives and make sure they know this isn't just a policy debate. It's a real opportunity to make retirement more affordable for millions. As we wait for the final version to take shape, stay informed and stay connected. These decisions will directly impact your taxes, your benefits, and your financial future. That's why I encourage you to hit the like button and subscribe to Social Security Posts. We're here to break down complex updates into clear, actionable information. And if you found this video helpful, please consider sharing it with a friend, family member, or neighbor who's also navigating retirement. The more people who understand these changes, the more we can push for the best possible outcome. Until next time, take care, and we'll see you soon with more updates that matter to you.